This was an interesting, just medium term bounce to cover a short, but it was just interesting. That's all. And it was something that happened. It was kind of quick and it rallied. We went from having a lot of open longs in here. Watch right there, which means there should be pressure on the market. But a couple things happen. Shorts come in. Watch. Let me just play it. Shorts come in right there in here, and this blue kicks out. Now, this blue is very interesting because this blue tells us that there are serious buyers, and there's a reason why we know that they're serious. There's a lot of them. That's why it kicked out so much. They're resting. They're not filled, and they were really close to getting filled when they put the order in. Not because they were there for years and months and weeks. When they put the order in, they were very close and they get filled. So you had this all happen. And it really never looks back and just walks up from here. You quickly see me pointing it out. I'd said it, then pointed it out, and it quickly showed a rally up into some of the stuck longs that were in here and in here. Now, overall, this market was weak, and it was similar to yesterday, where I was a little bullish coming in because we closed kind of strong yesterday with a rally mid-range, and we opened 13 higher. CPI was stronger than was not inflationary, which kind of relief rally for stocks. They rallied like 15 handles. But then when we opened up, there was all kinds of longs that were profiled out, too many of them, which really got me to scratch my head. You see the rally from there to there where these longs are. And so then it was going to kick back down and go south and get weak again. But the point is, when I take this was almost to the open. I started recording. You could see all these longs in here, and there was more of them. There was more of them as I went up, and it was too many longs. If you look in here, there were a lot more longs in the market than there were shorts, and yet we were up. And that's a head scratch when usually you stick more shorts when you're up on the session. So that combined with all the longs in here made me pull my horns off before the bell. And that's what's important. I said this yesterday. I say it again. It's not your opinion. It's the market's opinion. We're just trying to read it. We're trying to change our opinion based on the market's opinion. If you hold it too near and dear to your heart, you're not going to be able to let go of an opinion, which means let go of a trade, especially when it's not working. I guarantee you the average life of a loser is longer than a winner, because your mind doesn't want you to get out of a loser, because the moment you get out, you're wrong. But when you have a winner on, the mind is just trying to get you out because you're not right until you get out. And the mind doesn't care about the money. The mind cares about right and wrong. And that's when you got to put your mind on the leash and work at getting yourself with a good group that understands that to be objective, your mind has to be on the leash and you're walking it, instead of some big brain walking you on the leash, tugging you around, getting you emotional for all different subjective reasons.